IVM.
BQ Big Decisions, the BloombergQuint podcast that helps you make the right financial choices. Hello, and thanks for listening in. This is BQ Big Decisions, and I'm Alex Matthew. I want you to consider a hypothetical situation. Two of your neighbors are in need of money. It just so happens that they both require the exact same amount, and you're only going to be able to lend money to one of them. Who would you give money to? Assuming that you don't owe them any favors, you'd obviously want to know which of the two would most likely pay you back on time. So you set out to find out any information that you can get about whether they're good for the money. In other words, you first try to find out if they're creditworthy. Now, banks and other financial institutions do this too. So when it comes to giving out loans, it's not decided on a first-come, first-served basis. And that, in a sense, is the topic of today's conversation. One of the ways that banks decide whether you're creditworthy is to ask organizations called credit bureaus to provide what is called a credit score. My guest today is Sujata Ahlawat, Vice President and Head Direct-to-Consumer at TransUnion CIBIL, India's leading credit information company. Thanks so much for joining me, Sujata.
Thanks for having me over, Alex.
All right, let's get down to the meat of the conversation. And the most important question, really, what is a credit score?
A credit score can be considered as a numeric summary of your credit profile. It's a number that ranges from 300 to 900. It's made basis. So if you really see what goes into a credit profile, banks submit your repayment history of various loans and cards that you've taken to us.
Okay.
That forms the entire credit report.
Okay.
So basically, every time you take a loan or you've taken in the past as well, that's submitted to the credit bureaus.
Okay.
And for the ease of understanding, bureaus have match logic, and basis that we generate a credit score.
Okay.
So a CIBIL score ranges from 300 to 900. Obviously, the closer it is to 900, the better it is.
Okay.
And the banks then use it as one of the criterias to underwrite and look into the credit profile of a consumer.
Okay, so if I understand this correctly, you get information from banks and other financial institutions, and you use this process that you have that is standard for everybody, where you determine what somebody's creditworthiness is. It comes up to a score that is between 300 and 900. Absolutely. And the higher that you are, the better that it is.
Absolutely.
All right, now, but how is this determined, and what is the information that you look at per se?
Yeah. So there are basically four major parts that form a credit score. So one obviously is the repayment history.
Okay.
So whether you're paying back on time, are you paying your installments and credit card bills on the date they're due?
Sure.
The second big piece also is the amount of credit that you're taking. We know an old saying where don't bite more than what you can chew.
Yeah.
So in terms of the mixes that you have, are you taking credit frequently? That is another important part. A right mix of secured and unsecured loan types, that forms a part of the credit score as well.
So just to point out, a home loan in this situation would be secured and a credit card would be unsecured.
That's right.
Okay.
That's right. So these are the factors that really impact your credit score. The number of inquiries as well. So are you really frequently applying for credit? That has a marginal impact on the credit score as well.
Okay, so I have a question. If you don't have debt, and if you've never, applied for a credit card, or you don't have a credit card, and, do you then have a credit score?
So somebody who does not have any kind of credit history will not have a score. So we return what we call as a -1 number back to the individual. So obviously you need to have some kind of credit history.
And what does that -1 number indicate?
It indicates that there's no record that has been found in the bureau for that individual.
Okay. And how do banks and other financial institutions react to this number?
So basically, the way to look at it, obviously, for an individual to build his credit history, you need some bit of credit profile as well. So there are different loan types that an individual can go for to build a credit history. The most common being a consumer durable loan.
Sure.
So when you really go to one of these stores, buy a phone on installment, there you can start building your credit history.
Okay.
And that's an easy way to do that. The different secured cards that banks offer as well.
Okay.
So to build a score, you at least need 6 months of history.
Sure.
So these are two good ways to start building a credit profile. And post that, obviously, banks are open to, considering other factors that are there.
So I have a doubt. Suppose you've applied for a credit card, okay, and you've gotten a credit card from a bank. You've got a certain amount of leeway in terms of spending, but you've never spent, and you've just made the relevant payment on the maintenance of the card. Do you then still have a credit history?
You would have a credit history because the banks would report it as an open card.
Okay.
And you're making payments for whatever is due on time as well.
Because interestingly, I actually saw a situation like this. A colleague of mine who has an 840 score. So I was curious because that person had not missed any payments and that person had a maintenance fee. And I understand that each case is different, but I was just curious, where did that 60 go? So out of 900, he's got a score of 840. He has a credit card or had a credit card on which he never borrowed. Yeah. So I was trying to understand the methodology.
So the way to look at this, Alex, basically a credit score is about your behavior, right?
Sure.
How have you done in the past to ensure how will you do in future? So if you really had to ask me what are the steps that you need to do to get to 900, that's not possible.
Okay.
But the fact is, he had a good credit profile.
Yeah.
The way I look at this is he had a good credit profile. He's not over leveraging himself, but at the same time, the track which is there, like I said, there are different factors that impact the right mix of loans, right? Here, what I see is only a credit card. So there are different factors that go into it, but obviously repayment becomes an extremely important part of this entire
Understood.
Payment cycle.
And that's the key aspect.
Absolutely.
There. All right. Now, I do want to get into the next bit, which is why is a credit score important? Is it the first thing that is it the first port of call for a bank, especially when you're talking about, say, a home loan or a larger loan, whether or not to take up a customer? Is that something that banks do?
Yeah. So when you look at an importance of a credit score, I would kind of break it up into two parts. One is at the time of taking a loan. Obviously, when the banks start looking at filtering this, kind of applications that they get, a high credit score obviously helps. Different banks have different score cutoffs. Okay. So definitely, I think that's an important factor that the banks consider to take to sanction a loan application. But they definitely go deeper post that.
Okay.
So once you've said that, okay, the applicant meets
the cutoff. Yeah.
Then they go into seeing what kind of loans that he has, what kind of repayment track that he has. Is he over leveraged for a particular loan? Those are the factors that really impact.
Is that information that you provide, or is it?
It's also. So the way to look at it, a score is just one part of the entire credit profile.
Yeah.
So I would probably take a step back to kind of explain what are the features that are there in an individual's credit profile.
Sure.
So you have the credit score, obviously, which is
the headline.
Easy to understand.
That's
for me, if I have to monitor, like, okay, I have a higher score.
Yeah.
I'm good at it, but then obviously the other factors that I need to see.
Yeah.
The credit report becomes extremely important
as
well.
Sure.
Credit report basically will have all the loans that I've ever taken, whether it's the past or my active loans. What is my repayment month on month on those?
Yeah.
It also has my personal information that the bank submit.
Right.
So whether every time I apply for a loan, the personal information that I have given for a loan application is updated as well.
Sure.
You have inquiries which are there as well. So when or the individuals who are monitoring, they definitely need to look at all the features which are there.
Sure.
And now coming back to your previous point where you said the importance, obviously at the time of loan application is extremely important. But the banks also give preferential interest rates to individuals who have a high score.
Understood.
Because that's the easiest way to understand he's a good credit profile.
Which goes back to our hypothetical situation where you have two neighbors and both
Absolutely.
of them looking for money. The person who's more creditworthy gets a better score.
Absolutely.
And the better rate of interest.
Absolutely. But just to add something to that, obviously credit score would be considered, but what would also be considered is the income, because you don't want somebody, say if there were two individuals with the same score, income and expenses become an extremely...
Understood.
So debt to income ratio becomes extremely
So what
important.
you said in terms of your headline credit score being something that gets your foot in the door, you have several other factors that determine whether or not and what rate you get on the loan that you take.
Absolutely.
Now, I do want to understand in terms of how often do you periodically update the credit score and the information that you collect on individuals? Is there some periodicity that is maintained?
Yeah. So the banks submit the data on a regular basis. So RBI kind of mandates bank to submit on a regular basis. Monthly submission definitely happens.
Sure.
That's been happening. Now banks have actually gotten into a fortnightly cycle. Some of the public sector banks are also doing at a weekly basis as well. So every time data gets updated in the credit report, your credit score gets calculated. So it's at its point in time.
Understood. Now, I do want to understand, you said that the headline number is important, just to understand what your score, that in essence is the credit score. What, according to you, and you said also that each bank or financial institution has their own cutoff, but there must be a range, right? What is good and what is bad, and how do you read your credit score?
Yeah. So the way we look at credit score is there's definitely a score for every individual, right? While, historically, anything above 730, 725 is considered good as well.
Out of 900.
Out of 900. But the way banks lend, so like you said, if an individual applies for a bank and does not get through one of the banks, you should also look at opportunities with multiple financial institutions.
Sure.
So there are institutions who lend to somebody who has a lower score as well.
Yeah.
But anything above, I would say 725, definitely 725 to 730 is a positive way to look at it.
Okay. Now, you've talked about the various sources of the information that you collect. But there are also financial institutions out there who are now starting to look at things that are very, very different from what you're looking at, right? You're looking at credit history, you're looking at payment behavior. But these institutions, I know, are looking at your behavior on social media. They're looking at the kind of food that you're ordering outside and the number of times that you're ordering outside, what your history is on the internet in terms of what you search for. Yeah. Do you think that that's relevant in terms of determining whether or not somebody is creditworthy?
So the way, I look at it is, obviously, credit history is important, but the social element of it, because like we said, we have more and more young people coming back into the credit cycle.
Yeah.
So somebody who doesn't have a score, and how do you lend to those individuals as well?
Right.
So the social profile obviously becomes extremely important. There are multiple sources that they're looking at. Your behavior on internet really talks about what is your, so if I really had to say that, say diligence as an example.
Sure.
You're really looking at, you're surfing a lot of sites which talks about how to, ensure that you you build a new credit history.
Sure.
So obviously that kind of profiling comes in where you know that this person is diligent and is looking to do something, positive.
Yeah.
Likewise, when you look at from a sources of income, if the person is regularly spending a lot, on entertainment, or for that matter, when you look at, you also can measure the spends, the capability that an individual has.
Sure.
So I feel these are important from somebody who's new to credit. I think these are important sources to see, to judge. Judge might be a wrong word. In fact, to figure out how the person is behaving, and what we have seen, it was probably linking back to an earlier question that you had. It's not just for loans. Companies are now considering credit scores for jobs as well.
Okay.
Because the behavioral part becomes extremely important to judge how one is intent becomes extremely important.
Sure.
So through a credit report, we can judge capability, intent as well.
And also leverage, right?
Absolutely.
Leverage is important, and it's something that a lot of modern companies are looking at.
Absolutely.
And it's looked at globally as well.
That's right. So.
I do want to understand now, there are other credit bureaus. There are a few other credit bureaus that operate in India. I want to understand whether there's a disparity in the way that they look at information. And can you potentially have two very different credit scores on two different credit bureaus? Yeah.
So I would not call it disparity. Difference, yes, because every bureau has their own scoring logic,
Sure.
which is evolved over a period of time. So the way to look at it is when we started our scoring logic, CIBIL, TransUnion CIBIL is the oldest bureau.
Sure.
So over a period of time, we've kind of worked on the scoring logic. So every bureau has a different scoring logic, and hence you can have different scores. At the same time, when you look at the information which is reported now from the banks, right? While banks are mandated to offer the same and report the same credit information to everybody, there's certain information by virtue of being the oldest which are available, which might not be available in a certain bureau. So to your point, yes, individuals can have different credit scoring, different credit scores across bureaus. And hence it's important that you monitor. Banks also for underwriting, while majority of the banks use CIBIL because, we've been a part of the policy. It's like I said, it's individual, bureau scoring logic, and hence it could be different across bureaus as well.
The other question is, can a credit score go wrong?
The answer could be yes. It can go wrong. I think, like you said, credit scoring basically summarizes the information that is available in a report.
Yeah. So if the information is wrong,
and the way bureau works is, you consolidate the information submitted by the bank. So when we look from a monitoring perspective, like I said, it's even if you're not looking for a loan, it's very, very important to monitor your credit report.
Right.
And if you see a discrepancy in the credit report, it's very important to dispute it. So
Sure.
At CIBIL, we offer a free, so the entire dispute resolution system is offered free to a consumer.
Okay.
So every time you monitor and you see a discrepancy in your account, you should definitely raise a dispute.
Right.
So yes, there could be instances where because of the information which is there, the score might be different.
And this is, it's also important to note that if a bank, say, is offering you a particular rate of return based on your credit score, and they point out that, hey, your credit score is only 670 and therefore, or 720, like you said, that it's important if you think that it's too low, that you should have a conversation with CIBIL and say, okay, this is information that I think is relevant that you should also consider, right?
Absolutely. In fact, not just when you're applying to a bank, you should monitor your credit profile on a regular basis,
On an ongoing basis.
And if there's any kind of information mismatch, you can write. In fact, like you said, it's a completely automated system that we've created.
Yeah.
As soon as you see something which you think is not right, you can dispute right there online, and we send it back to the banks for correction.
All right. Now, I do want to understand this. Now, I understand this from the perspective of a company and a rating that companies have on debt. And I think that that's the same case with individuals and their credit score. Yeah. You can lose your credit score very quickly. You can go from an 850 straight down to a 600 if you miss a payment. And that can happen overnight. But I would think that it takes a little while to build yourself back up to a very good score. Is that right? And how do you go about doing it?
That's absolutely right. So I think building a score requires discipline and patience.
Okay.
So the various ways that you can help build a score, one is regularize your payments, right? I think that's a very important part that, you need to ensure all your outstandings are cleared, make sure you pay back on time, because like I said, your behavior determines your behavior in future. So,
Yes.
you need to regularly show that you're paying back on time. If you think you're over leveraged, if there are too many loans that you're taking, consolidate those loans, close out as many as you can. That's extremely important. Do not apply. So you know that, your score has become low, and consumers tend to apply to multiple places, right?
Yes.
Inquiries, the multiple inquiries. Make sure you're not applying to
Multiple places.
places. So I think these are the 3-4 big things that an individual can do to ensure they come back on track.
From the perspective of CIBIL and Credit Information Bureau, how long do you give? Or in the sense, what I'm trying to get at is, suppose somebody has started becoming more regular in their payments, how long does it take for that score to go back to what it was?
Yeah. So, Alex, that depends on where is that individual coming from. So if you talk about somebody who was a 650 or really low, who has a written off account, that will take time. But then you have people who have a couple of missed payments, which could be not just because you couldn't pay, but you've forgotten.
You've forgotten, yeah.
So, anywhere between, I would say, 6 to 12 months. But if your profile is like really, really low, that takes time. Because obviously, what happens here is somebody who had a really low credit score, you need credit to build credit.
Yes.
That's the most important thing, right? you need to look at avenues where somebody would be open to lending to you to build that credit profile as well.
Understood.
So somebody who has a low credit score, maybe it was not intentional, but you're going through a bad phase in life. Close out all of that. Go in for a secured loan.
Yeah.
A bank is more open to giving a secured loan, even if it's a low credit profile. Show, pay back on time, and there's definitely no reason why you can't build your score again. So.
Understood. All right. I think that more or less covers all the aspects of a credit score. Just one last question in terms of a doubt that I had. I think many years back, somebody told me that your bill payments on a mobile phone, can also be taken into account when you're getting your credit score. Is that right?
No. So
that's a fallacy.
But the way to look at it, to what you just said some time back, I think that is definitely a way to look at alternate data that everybody is looking at. So currently the credit bureaus, by law, we only have credit data.
But and that's provided by the
banks, right? Yeah. So, but telecom companies actually are, they are members as well.
Yeah.
So I would flip it around to say that if your credit score is good, the limit that you have on your mobile phone could be dependent on that.
Interesting. All right. So, on that note, I'd like to thank you so much, Sujata, for joining me on this conversation.
Thanks, Alex. And like I said, credit score takes time to build. Be patient, be disciplined, and monitor your score regularly.
Well, that's the message coming in from Sujata. Thank you so much for listening into this conversation. I hope that it helped you out and that you know a little bit more about credit scores than you did before you started listening. Thanks so much for listening in. This is Alex Matthews signing off. Have a great weekend.
If you enjoyed Big Decisions, check out some other podcasts on the IVM Podcast Network. You can check out Paisa Vaisa, hosted by Anupam Gupta, Advertising is Dead, hosted by Varun Dugirala, the Ronnie Screwwala podcast, hosted by Ronnie Screwwala, or Cyrus Says, hosted by Cyrus Procha. These shows are available on the IVM Podcast website, app, or wherever you get your podcasts from.
Are you constantly seeking happiness? Wondering how to make the most of every day? How not to let your inhibitions stop you from achieving your goals? It's now time to get your A-game on. It's time to unlock your true potential. Tune in to the Empowering series with me, Zarina Poonawalla, to feel empowered in all genres of life. From behavioral skills to management skills. From health to relationships. From mental well-being to emotional well-being. And of course, your finances. I've got you covered. With these tips and tricks from me, Zarina, and true life stories from my amazing guests, you're bound to bring your purest to the table. Tune in to the Empowering series with Zarina Poonawalla every Thursday on the IVM Podcast app, website, or wherever you listen to podcasts.
I hope you enjoyed that show. We'd like to thank our sponsors this week, HDFC Life and Paytm Money. If you have a brand and you think that podcasting would work well for you and your brand, then please do get in touch with you. We are always looking for new brands to bring on board. And let me tell you a couple of things that you should check out this week. On IVM Likes is Abbas's last episode as an IVM staffer. Join him, Ritika, and Antariksh as they talk about movies which have multiple plot lines that come together in the end. On Football Tripal, Karthik, Gaurav, and Simram give their predictions for this year's round of 16 of the Champions League. On our Kannada podcast, Thale Harate, space entrepreneur Narayan Prasad joins Pawan and Ganesh to shed light on SpaceX, to space tourism and satellite warfare. On Geek Fruit, Tejas, Dinkar, and Jishnu talk about the announcement of the new Mortal Kombat animated movie. On Storytellers and Storysellers, Vineet is joined by the man who manages Bhuvan Bam, Rohit Raj, and the head of TVF Play at The Viral Fever, Vinay Pillai, to talk about the growth of the online digital space. Thanks and keep listening.